Hello Value investors, thank you for joining me. Today I want to talk about Unity software and why I believe that Unity software is overvalued. If you haven't done so already, don't forget to check out our marketplace on Seeking Alpha. It's called Deep Value Returns. I'll tell you the stocks I own and why, with balanced argument for the stocks I own. What's more, you're welcome to do a totally free trial to see if you find stocks that suits you. So let's get started. Unity software has quite a large following and many investors are really positively attracted to it because they're developers and they know the software quite well, and it has a lot of appeal within certain communities. So I can see that playing out here. So the thing that it kind of comes out is that it had a very strong 2020. But as we start looking out to Q4 and then I do some assumptions about 21, it doesn't really play out, and the stock is more likely than not growing at 30% year over year. So that's the number that I want us to kind of work off. So here's the thing, right? So as we look out, we can see that it had a very strong dollar-based net retention. So this is an important metric in the SaaS world. It tells you how strongly the company is able to upsell to its customer base. The problem is that it masks the new customers coming on board. So your existing customer base you're able to sell quite aggressively to, but then the new customers coming on board is really what you need as well. So you can see here in the green arrow, this time last year the sequential growth coming out of Q2 to Q3 was 7% of new customers coming on board, but right now in this quarter, the sequential growth from Q2 was only 3%. So you've seen that new customers are coming slower and acquiring the software at not quite the same rate as they were. So even though the company is able to upsell to its existing customer base, the new customers are really kind of not coming as aggressively. Another thing that I think is quite important here is that 60% of its revenues come from this operate solutions business. And this is a usage-based model. So we've seen a lot of this happening in 2020 where there's been a lot of usage in the gaming community, and the way that this business line works is that it has a revenue share. The more that the software gets used, the more that Unity software gets paid. But if gaming slows down, or even if it doesn't even need to slow down a lot, but even when it comes to lap the amount of usage that we saw in 2020, it's going to struggle to see the level of growth in this business. And this unit here makes up 60% of its revenues. So it's going to be difficult for it to come across and really try and grow that revenue base. Two more things I want to point out. So it's not all bad, and there is this aspect here that we can see that non-GAAP gross margins are really high. They're hitting 80%. This is a very high quality. Having said that, we saw that right now in Q3, free cash flow was 10% of revenues, but going out already back to Q4, the company is saying that, okay, we're going to turn negative again because we need to continue to invest for growth. But if you're negative free cash flow and you're not really reporting that level of revenue growth rate, it's kind of difficult to build a bullish case. So a few more things I wanted to touch about. So assuming the company guides is going to have 321 million shares outstanding going into Q4, that puts its market cap right now, assuming no share price appreciation, at 38 billion. So if we look out to its guidance, just some ballpark estimates for 2021, if you look at its revenue, assume that it goes up by 30%, that means that its revenues could reach $1 billion. That means investors are paying right now 38 times forward revenues. That's quite a large multiple. So I try to think here what kind of SaaS companies are being priced at 38 times forward sales while reporting revenue growth rates of 30%. So I came up with Cooper. Cooper is kind of trading, it's growing at approximately 30% into next year, but it's priced slightly cheaper, and Cooper's quite a famous overvalued stock. So it's kind of, you're going to struggle within Unity to see a reason to continue to be a shareholder and for new shareholders to come on board. So We talked about its revenue growth rate in detail, we talked about its usage-based model, we talked about the positive aspect, which is the very high non-GAAP gross profit margins. We talked about the multiple of 38 times next year's sales. Hope you found this video useful. Don't forget to check out my marketplace on Seeking Alpha. Thanks, bye.